Good morning, everyone. Welcome to Daily Mortgage Rates Live with the Mortgage Calculator. We'll wait just a few minutes like we do every morning to get started, give everybody a chance to jump on, let us go live on all of the different platforms. We did put the chat up, so you can drop a comment in the chat. I see some people were already commenting. So as you tune in, feel free to drop a comment there in the chat, and we will wait just a couple of minutes to get started. Good morning, everybody in the chat. Hope everyone is having a happy Friday. We will go through the rates here shortly and then do our deep dive topic of today, which is foreign national loans, something Jose is always very excited about. And we will get into that here in a little bit. Good morning to everybody there in the chat, dropping comments. Christina, Adam, April, Mark, Adam, the other Adam. Shout out to the Mortgage Calculator team tuning in. We will get started here in just a minute. All right, it looks like we are live on all of the different platforms, so we are good to go. We'll go ahead and take the chat off the screen, and then we will get started. Welcome, everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans. We do this show every morning at 11 a.m. Eastern on weekdays to go through the different rates of different programs, and then we do a deep dive into a different topic every day. Now, today's deep dive is going to be a topic that we are very familiar with here at the Mortgage Calculator because we specialize in non-QM loans, which is foreign national loans. Now, on top of the fact that we specialize in these type of loans, our main office is actually located here in South Florida, where Jose has been a realtor and a loan officer for the past 27 years. So he definitely has a lot of experience here with foreign national loans. So we'll let him get into that a little bit later. But before that, like we do every morning, we'll go ahead and pull up our pricing tool and go through the different rates for today. So Nick, why don't we go ahead and pull up the pricing and see what the market is looking like this morning?
All right, lots of news this week, so hopefully we see some movement. Let's go ahead and change my screens and we'll get started. All right, as Kyle mentioned, this is our pricing tool for our mortgage professionals. We have over 300 licensed loan officers in 22 states for primary and second homes. And we can do our business purpose DSCR, which is going to be one of the topics today for the foreign nationals, in 44 states there for business purpose loans. So if you'd like a full breakdown, a full loan estimate, please get with one of our team members. They'd be happy to bring that for you. This tool will show us the general pricing and the general APRs for the programs because it is just after 11 a.m. Eastern on May 5th here. They will have our general pricing live and our general APRs. So let's go ahead and set up a basic scenario and check out the rates today. We're going to set everything as a 400,000 loan amount here for our demo. We'll set the LTV to 80% loan, 20% down payment. We'll set the desired price to 99. That means we're going to ask the computer to find the best rate at a cost of one discount point, which is typically our typical request right now, as customers would like to buy down the rate a little bit. Now we're going to compare our conforming conventional loans to our FHA, and then we'll check out our expanded guidelines, aka non-QM, where we have over 5,000 additional loan programs using alternative income. We can do VA loans as well. That's only for our eligible veterans. So if you are an eligible vet, we appreciate your service. Happy to quote it for you, but not everybody is, so we don't do that live. And same with USDA. That's only for properties in a rural eligible area. If you are shopping in a rural area, please let us know. We can quote that pretty quickly, but not everybody is, so we don't do that live either. So we'll start with conforming conventional. We'll set up our scenario, a purchase, 30-year fixed standard loan, primary occupancy, single family home, 1 unit, state of Florida, county Miami-Dade, and an estimated FICO score of 760 for all our demos today, and an estimated debt to income ratio of 40 for all our demos today. So with these basic setups, let's go ahead and check out the rates this morning. Looks like a little bit up from yesterday. Yesterday was a little bit down. Today it's a little bit up. We're back up to about what we were earlier this week. So we love to do this show and see the fluctuations here. Looks like the best option is actually this one a little bit lower, 6.5% rate for 0.875 discount points and costs, and a final APR of 6.672 here for conventional loan. So when we compare across the programs, we always want to check out the APR. That will include all the costs and allow us to compare apples to apples across the different options. So if for any reason our customer doesn't qualify for conventional or wants to check out some other programs, typically the next option that we always want to check out, set this back up to 80%. The next option we always want to compare is FHA. FHA does have a little bit more leniency on credit and some other guidelines, as well as a higher debt to income ratio we can go to. So we'll keep everything else the same so we can compare across the programs. Let's check out the rates this morning for FHA. So about the same as it was yesterday, I believe. Best option the computer found here, 5.625 rate for 1 discount point in cost, and the final APR of 6.227. So actually a little bit lower APR when we compare across programs here, even with FHA has a mortgage insurance cost upfront as well as yearly, but those have been reduced recently, so very comparable. Definitely recommend our customers out there shopping. FHA in this case is actually a little bit cheaper for our scenario, so definitely check that out if you're trying to compare those programs. Now, if for any reason our borrower doesn't qualify for conventional or FHA, let's set up our scenario the same here. Many other banks and lenders don't have any other programs, but we here at the Mortgage Calculator, we have over 5,000 additional programs under expanded guidelines, aka non-QM, where we can use alternative income. So we'll keep everything else the same, but we have a new option that pops up here for income verification. So for our FHA and conventional, we always have to use full doc. That means 2 years tax returns. So typically we'll choose a non-QM program in order to choose one of these other options, such as 1 year, 2 year alt doc. Asset related programs, we go over those in a few shows. We have business bank statement programs. We have our investor DSCR programs, which we'll talk about in a minute. We have personal bank statement programs, VOE programs, 1099 programs, P&L programs, all these different options. The most popular option by far, though, for a primary home is our 12-month personal bank statement program. And that's for our self-employed borrowers. Typically, our self-employed borrowers, when they have 2 years of tax returns, they often have write-offs and may not qualify at all or may not qualify for as much income as they'd like. So in this case, for these self-employed borrowers, we're able to use their actual bank statements, the last 12 months of bank statements, to determine their debt to income ratio using their bank statements instead of their tax return. So most self-employed borrowers qualify when they wouldn't qualify at all or qualify for a much larger income amount and a much larger loan amount. So these are great solutions for our borrowers who may be self-employed or have any other issues qualifying under the conventional guidelines. So let's check out our bank statement rates this morning. These rates are always going to be a little bit higher because they are non-QM programs. They're solutions here. But some great options here we have at the top. Looks like the best option, 7.25 rate this morning for 1 discount point in cost and a final APR of 7.330. So remember our conventional was 6.6 something, the FHA was 6.2 something, and here we have a completely different option using bank statements for just a little bit higher cost there, a 7.3 APR when we compare across the program. So we love to offer these solutions for our borrowers that may need that little bit of extra help. And there's a ton of different versions of this program. Please get with our team. There's hundreds of different versions here that may allow things like foreclosure and other things like that, credit events. So please let us know if you need some help with these programs. Now for our final demo today, we always want to do a couple investment property scenarios for our investors out there. So we love to work with our investors. So if we switch this to investment property, slide this up to 80%, same as we've been doing all day, 80% loan to value, 20% down payment. We'll be able to compare our options for investment properties. We'll have a conventional option as well as our non-QM options. Remember, FHA, VA, USDA are not eligible for investments. So first we'll select conform and conventional. All we've done is change to investment property, and let's check out the investment rates this morning. Remember, the GSEs that do conventional programs have added adjustments for these investment properties. So unfortunately, we don't find any options with 1 discount point, even though that's what we asked for. The best APR option the computer found is a 7% rate for 3.5 discount points in cost and a final APR of 7.260. So still a great option for our borrowers that qualify, but many of our investors would like an option with lower discount points. So on conventional, even if we go a little bit higher in rate, like here's some good options, 7.49 for 2.5 discount points. Many of our investors would like to go a little bit higher than that or some other way lower their discount points. So that's where we love to present our non-QM options. So for our final demo, we'll set this to investment property, set this to 80%, and we'll compare our conventional investment property to our non-QM expanded guidelines. Now we have to select first our income verification. The most popular option by far for an investment property is going to be our investor DSCR programs. And that's because our debt service coverage ratio programs do not actually require any income or employment from the borrower. Simply going to use the estimated rental income from the property we're purchasing in this case. And if it covers the expenses, the PITIA of the mortgage, the cost, that is a ratio of 1.00 or higher, as in the property cash flows. We even have options for a DSCR ratio under 1 where the property doesn't quite cash flow. So tons of different options here. I'm going to leave this blank so we can see all the different options in our demo. And the final thing we have to select is our prepayment penalty. So standard for all our investment properties non-QM is going to be a 3-year prepayment penalty. We can choose 0 if we wish. That will limit the loan options and cost more. And we can choose 5 years if we wish. That will also limit the loan programs but save us a little money. So the most standard option is 3 years, so we can see the most programs. Now, we can check out the rates real quick, but I want to bring up one thing because this is going to segue into Jose's option, citizenship. So everything we've done is for citizens. So what Jose is going to present is when we switch this to foreign national, we're going to see what happens there. But for our final live demo, as we do every day, we'll keep that as U.S. citizen and check out our DSCR rates this morning. So it looks like a good option here at the top, 7.625 rate for 0.850 discount points and costs, and a final APR of 7.7. So remember the conventional was 7.2 something for the best option. Here we're just a little bit higher, and it's a DSCR product, meaning we don't need any employment or any income. And for our investors with multiple properties, you can start multiple DSCR loans at the same time since there's no employment or income, cash out multiple properties, purchase multiple properties. Very flexible program with little documentation. And if you see here, we have a ton of different options for different ratios, a ton of different options for different prepayment penalty amounts. Some of these may allow things like short-term rental income. So there's dozens of different versions of this program, and some of them may even allow foreign nationals. So that's our segue here into our next demo here with Jose, where when we select foreign national here, we'll see what happens and which ones of these programs are eligible for foreign nationals. So let me go ahead and switch my screens, and then we'll let Jose take over. All right. So as I mentioned, the topic for today is going to be foreign nationals. There's a few different options, but as we just went over, we can choose foreign nationals for our DSCR business purpose. That's usually the most popular program for our foreign nationals. But I'm sure Jose has a couple tricks up his sleeve as well that we can go over. So if you're ready, Jose, we kind of perfectly segued into there for you. So go ahead and take over.
Absolutely. How's everybody doing this morning? Thank you for joining us for Daily Rates Live with the Mortgage Calculator. First thing I wanted to get into is what is a foreign national, right? A foreign national is not a resident of the U.S., cannot have dual citizenship in the U.S. either. A foreign national cannot be deriving their income for purposes of the loan from the U.S. Now, a foreign national is not required to have U.S. credit, but if they do have U.S. credit, then you would be able, they would be applicable for other options, right? If they have credit, there's options then that are going to be a little bit lower, lower credit, lower interest rates, obviously, because you can verify their ability to pay. In the same manner, you can verify their ability to pay for a U.S. national. Uh, so, so just to be aware, there are foreign national options that allow the foreign national to qualify for the loan without any U.S. credit at all, and also using the DSCR option. That's going to be the first example that I'm going to show you, which is no U.S. Credit required, no income required, no CPA letter required, does not even require any foreign credit reference letters. That's the most streamlined foreign national option that we have. Then the next step would be the full doc foreign national, where they are going to require either a CPA letter if the foreign national is self-employed, or an employer letter if the foreign national is an employee, and then they will require a credit reference letter, and depending on the option, 2 credit reference letters, because we do have multiple options. We have the no credit reference letter option, 1 credit reference option, and 2 credit reference letter options. So, each one does come with different interest rates, obviously, because the more they verify, the less risk to the investor that's eventually funding this loan. So be aware, foreign national, not a citizen of the U.S., cannot have dual citizenship. You can't be a foreign national and apply for a foreign national loan because you're a citizen of another country when you also have any U.S. citizenship, U.S. permanent residency, non-permanent resident alien. They can't be working here with an I-10 and say, no, but I got my passport, I got this, I got that, I'm a foreign national. No, at that point, they would be an I-10 borrower.
And we do have I-10 programs,
Yeah,
but that's not what we're talking about here.
Right, because the I-10 program is somebody who's living here permanently, full-time, deriving their income here from the U.S., and very importantly, is required to have U.S. credit, as well as have the I-10 document to show that that is actually how they are processing their income and submitting their tax returns with their I-10, which is an international tax ID number. That's what I-10 stands for. So let me show you our examples here. I have some purchase examples for you, right? Please note the maximum LTV for foreign nationals right now is 75% down payment, right? So, and today we're going over the DSCR.
You mean 75 LTV, 25%?
Yes, sorry, 25% down payment. Sorry, 75% LTV. I transposed my thoughts there. So this option only requires a valid passport and verification of the assets for the cash to close and for the 12 months reserves. And keep in mind that that money does have to be in a U.S. account already verified by underwriting prior to closing. So that is the catch. If they don't have a U.S. account here, they are going to need a U.S. account here. That's usually the catch, because normally you have to apply for a U.S. bank account in person in the United States. There may be a workaround for that, with some of these banks that are multinational, like HSBC and Royal, and I think a Royal Bank of Canada and a few others. But normally you do have to be present in the U.S. to open your account. So first example we have here with 25% down DSCR, like I mentioned, verifying just passport and assets. And by the way, I mentioned just passport because with this option, if they are not going to sign in the U.S., if they're going to sign in their country where they live, either through a remote online notarization or by going in person to the U.S. Embassy or the U.S. Consulate in their country, because that is what is required. It has to be a U.S. based notary on the signing these documents. Then if they're not going to sign in the U.S., this option does not require them to have a visa. Now, remember that was holding back a lot of foreign national buyers that didn't have a visa. because almost every foreign national option out there requires the borrower to have, if they are not from a visa waiver country, like for example, Canada is a visa waiver country. Um, the European Union countries are visa waiver countries, meaning you don't have to have a visa to come into the United States. So if you're from one of those countries, then normally you would be okay. But if you're not, normally you would be required to have a visa on your passport in order to close, because that's what you would need to come to the U.S. Well, with this option, if they're not signing in the U.S., they don't care. So any of those people that are waiting 6 months, 8 months, 9 months to get the appointment with the consulate in their country to get the visa to finally be able to come here and buy their place, well, with this option, you can provide them the solution that they don't need it. So you may not have thought about that as a solution to their problems, but that's one of the big reasons why more foreign nationals are not here buying. Simply, they don't have the visa in their passport. That's simply what it boils down to. So 9.625 here, giving us a lender credit. 8.75 is the lowest buy down option. And this is the DSCR purchase with 30% down, 25% down. Here's our DSCR purchase, 30% down. And you'll notice rate gets a little bit lower. We're 9.25 there with a $788 lender credit. And we are 8.25 is the lowest rate option. And just to show you where we were at a 75 is 9.625 and 8.75. So it does drop substantially with an extra 5% down. And now let me show you the full doc for national option. And these are fully amortizing 30-year loans. Now, this full doc option is going to require the 2 credit reference letters, and is going to require, if the borrower is self-employed, a CPA letter from their country of origin, and if they are an employee, an employer letter, similar to very similar to the CPA letter, but just on the employer letterhead instead. So here you have very good 8.625 with a lender credit. And look at that, 7.625 buy down option. And the same loan with 30% down, we're looking at 8.5% with a lender credit of $656. And we're looking at 7.5% as the lowest buy down option. And I don't have any refi quotes here to show you, but what I will state is that the only difference on the refi quotes is that the LTV drops, but the rates are going to be the same. You got usually there's a 5% LTV drop in the examples, and some of them are 10% LTV drops. But similar parameters that you have here. The main thing to consider is, are you going to go full doc to take advantage of a little bit better rate, but then have to provide accountant letters, credit reference letters, and a valid visa? Or are you going to go DSCR? If DSCR, obviously the property has to DSCR, but are you going to go DSCR and avoid having to provide all the extra documentation? And by the way, we do have a DSCR option for foreign nationals at a 70% for 0.75 to 0.99 DSCR and less than 0.75 DSCR as well.
All right, you brought up a good point there, Jose, but the more documents you need, why don't you touch on the translation, and then we have a question about that. So real quick, just touch on the more documents, the more translations, and then we'll open this question up.
Absolutely. All documents provided are required to be translated to English if they're not already in English by a certified translator. That means a company that you have to give the documents to and pay them to translate them. So you will have additional costs and time to consider. So it would always be recommended then that any letters coming from accountants, employers, credit reference letters already be in English or else they will definitely need to be translated. So,
Okay, so all documents. So that even means bank statements need to be
mhm,
translated. So,
yeah,
could get costly and could be a lot of documents, right? If every document for the loan, say there's 20 documents, that takes a while to translate, right? So,
correct.
okay, so now let's bring up the question from Nick here. Great question. Signing outside the U.S. Does that also present other translation issues? So we talked on the ones that we know about, but why don't we talk a little bit on the signing and stuff like that?
Well, all documents that they're going to be signing as part of the package will be a standard closing package for the program. They're not going to be in the native language. All the documents are going to be in English. Whatever they're signing at closing is going to be in English. So there won't be any document translation issues with the closing documents. The only document translation issues will be with all any other document presented for file documentation that is not in English.
Exactly.
That's gonna be the issue.
And if the borrower doesn't read English, he or she will need a translator at closing, obviously, to explain the document. So I think that's what you're referring to as well. But we don't actually have to print those out, right? That's someone sitting in the room with them that's going to translate the documents for them, right? That's kind of the closing part of it, right?
Yeah. The other issue, real issue to be aware of here is just the logistical issue, right? There's certain logistical issues on these loans that may not be taken into consideration at the onset. A is the one that I mentioned about the checking account, that the money needs to be here in a checking account here, not just wired over to the title company from their country, right? It needs to be here already verified. And the reason is, and the reserves also, because the banks want to make sure that the borrower is going to be able to pay the loan, right? A lot of times, these countries at any given moment could put currency restrictions, right? Where then the nationals of that country may not be able to export U.S. currency. They may not be able to exchange their national currency to dollars and send them out of the country. And if they are able to do so, it's like at a 30, 40, or 50% surcharge. So to avoid any issues that may occur like that, to keep the borrower from being able to pay, they require usually, got to read into the guidelines, but most of the ones that I read require the money for the transaction to be here, including the down payment, the closing costs, and the reserves that need to be verified already need to be in an account here. So that's a big logistical issue if they don't have an account here. Then the other logistical issue is the signing, right? The signing needs to be done either here in person in the United States, or needs to be done in an embassy or consulate in person in the country wherever they are, or it can be remote online notarization. But remote online notarization is not accepted by every title underwriter, nor is it accepted by every investor, the eventual buyer of the loan. So beware of that. And early in the transaction, reach out to the title company who's going to close the deal and ask them, do you accept, does your title underwriter allow remote online notarization? And then make sure that the investor allows it as well, and find out if they have any required providers that need to be used. Because I've had situation where same borrower, same investor, two loans for two different purchases, two different title companies, because it was, seller designated title company. One of them allowed remote online notarization, and we were able to do that one on schedule. And the other one did not allow remote online notarization, and we were delayed by, like, luckily only by 10 days, that she was able to get an appointment at the consulate to sign. So same borrower, the same investor buying the loan, but two different title companies. So that's something we had to take into consideration. So keep an eye on that.
The other thing I wanted to highlight there on the wire in, remember, these are international wires. They have to go through OFAC and other things. Sometimes they can take a week, right, Jose? A lot of times to clear the funds. So your borrowers not only have to get it to the U.S., but you got to get it here early, right? They got to be in the U.S. clear all the sanctions and everything to clear an international wire so that we all know that the money's here and it's cleared and it's good and it's gone through all the sanctions and all those checks for that as well. So a lot longer than what you're used to. So again, logistics. Make sure you plan ahead. We had one other question here from Adam about a recommended translator. I don't think there's really one vendor that will work in all cases because, different languages, different countries, stuff like that. So I don't think, do you have any recommendations on that, Jose? Is there any national or I guess multinational vendors that work for everybody?
No, you just you got to be calling around and see who's gonna work quickly. I mean, it helps to reach out, to the investor. Sometimes they have companies that they can recommend. Some of them, like one that I just put through, just automatically charge the translation fee of $800, and they take care of it. So it really depends. Every situation is going to be different.
All right, and one more question popped in. Perfect. Question from Nick about the signing. Signing appointment would be at the U.S. consulate in their country. Can you just run over that one more time, please?
Yeah, it would have to be at a U.S. consulate. So if they happen to be in their home country and they want to do it there, that's fine. If they're in another country because they're traveling or whatever, as long as the package gets to them, and then they have to go to the consulate and get it signed and notarized and then ship it back. So there is a time frame to consider because the package has to get sent to them via courier, not via email, and then they got to go to the consulate and then they got to courier it back to us.
Yep, logistics, right? They're relatively low documentation loans, but the documents you got to have, logistics, and the closings and the processes, logistics there. Good questions. All right, let's go ahead and wrap it up then, Kyle, if there's no more questions.
Absolutely. So great programs there. And remember that we have over 300 loan officers and 22 states we're licensed in to do primary and secondary homes. But these foreign national loans, we're typically doing a DSCR loan, typically closing in an LLC. We can do these in 44 states when that is the case. Now, we do this show every single weekday morning at 11 a.m. Eastern time where we go through all of the different rates for the different programs and then do a deep dive like we did today with the foreign national loans. So definitely tune in every weekday while we go through this. Thank you, Nick. Thank you, Jose. Thank you, everyone, for tuning in. We hope to see you all on Monday morning for the next episode of Daily Mortgage Rates Live with the Mortgage Calculator. Everybody have a great weekend.
Thanks, everybody.
Thank you, everybody.